Good morning to all traders and welcome to another daily market size video. Today is Monday, the 22nd of July. We are really soft on the economic calendar. We don't expect much, to be honest. But the truth is that we do expect the UK's next Prime Minister to the results tomorrow, and also Thursday we'll have ECB's decision for interest rates. This is going to be a very interesting week because on top of those two mega events, we also have corporate earnings from major companies in the US, including Facebook, Amazon, and others. And of course, we're still waiting to come, for the end of July, where the FOMC meeting is going to occur, because markets really expect, I would say, impatiently to see whether the Fed is going to cut, whether they're going to cut 25 points, 50 points, or whether they're going to cut at all. Well, the thing is that since last Thursday's speech from Williams, where markets actually read his speech as quite dovish, markets managed to return all the losses, all the gains back pretty much on the Friday because of Bullard's speech. He's also reiterated that there is no economic indicators that really show that the US is weakening as much as the other countries, and that is most likely the July decision. That is most likely to be an insurance cut, like cut at 25 points or so, just to make sure the risk of further downside risks are eliminated. Now, I want to start with the US index, of course, and then we talk about the S&P as well. Now, we'll be talking about the index being on a C wave, okay, after this move down here, correction A, B, C, but in the longer term, we've got this as an A, B, and C. So I'm waiting for C wave. It's likely to be an impulse. We are done with wave A, and we are actually nearly done with wave 2, in my opinion. Okay, so we had 1, 2, 3, 4, 5, then an ABC looks like it's going to be. Okay, so we've got an A, the B, and the C as a correction. I'm expecting C wave to go back to 97.60 or so. I wouldn't be surprised, but at the same time, of course, even if we stayed, if we made within these limits, the chance to still move downside to the downside is very, very good. Now, if we broke above the 97.82, that would change the whole image, because we would cross above wave 1, because on the daily this is just a false break. We'll cross above 1, so most likely we're going to go to 98.36 before we receive any further clues. Or down on the 1 hour, not much different. So we have an impulsive A wave, and then a correction B, and then we're looking at another impulsive C. We ended with that sub-renewed correction, and most likely we're going to end with another impulse to the upside for wave C, which could end around 97.30 or so. The thing is, because we stopped really at the 50 Fibonacci here of this last move, right? If you consider this as 1, 2, then that means that in case we break above that level, we could be heading up to the upside, so for wave 3. So now we still see this as ABC, but in case we break above that level, that becomes a 3, so we're most likely looking at going to new highs. That will be, of course, dependent on the FOMC's decision as well, because we still actually, I think it's the week after, right, Wednesday or so, 31st of July, I think it's either Tuesday or Wednesday next week. So until then, we're most likely going to move within those levels, restrained levels, and restrained price action. Now, the S&P, ignore this. I think this is just a broker error, and it's most likely going to be removed soon. But anyhow, I see this still as an ABC, okay? That hasn't changed for me. Still same view. When did we have 5 here, and we're looking at expanding triangle, expanding the flat, okay? So we are W, X, and Y. We're looking to complete wave Y now. We are 1, 2, we're going for wave 3, then 4 and 5. If we go a little bit lower, things get a bit more clear. Okay, this looks like an leading triangle, okay? And we have 1, 2, 3, 4, 5. We're looking for wave C of this correction, and from here, or even where we are now, we're looking to go up for wave 3. Now down on the 1 hour, as you probably see this as a zooming in view, we had A, B, and we're waiting for wave C. Now, if we pull the Fibonacci extension tool between A and B, and from this top, we are getting 100 Fibonacci at 129.57, 161 Fibonacci at 29.27. So anywhere between that, these levels, prices might as well just stop correcting and reverse up to complete wave 3. Okay, that would, of course, if we get prices moving lower, that might ruin this nice bullish hidden divergence signal. So I'm not sure whether we're going to see a further down move to the 161. It might look a bit overextended, but 29.60 or so looks like a good level for bulls to step in. That, of course, is depending really on the corporate earnings, but more on Fed's decision. So I want to thank you for watching for another day, and as always, I want to remind you to visit our blogs where we cover the latest ideas, provide all the latest headlines from the news from media, and all the necessary tools trader needs.